have spoken. And that's the beauty of a democratic country and a democracy, isn't it? Republican Donald Trump has claimed victory over Kamala Harris in the US presidential elections 4 years after he left the White House. He's also tipped to take hold of the Senate and is making gains in the House, giving the Republican Party a strong hold over the American economy. Was Trump ever beatable? Well, that's hard to tell, I suppose, but it's very clear that Americans more than ever are buying what he's selling. Given the United States still has the world's biggest military, the world's biggest economy and the world's most influential culture, the rest of us around the globe are just waiting to see what is in store. One thing is for sure, a second Trump administration has the potential to reshape the economy in fundamental ways. Amongst other things, the president-elect has promised to slap tariffs on imports, 60% on China, supposedly, and between 10 and 20 for the rest of the world. 20% tariff on $8.8 billion that New Zealand exports to the US is $1.76 billion of duties that US consumers or New Zealand exporters might bear. But there may be some positives. Joining me now is Mark Lister, Investment Director at Craig's Investment Partners. Mark, it's good to have you on the show.
G'day, how you doing?
I'm good, my friend. Thank you for taking time to talk to us. Now, from an investment perspective, is Trump's victory, does it have some positives?
Yeah, it certainly does. I mean, financial markets really liked it, which is why you saw the US share market hit new highs overnight, and a lot of optimism sort of out there across financial markets. Now, that's because he's a pro-growth, pro-business candidate, president-elect, who, you know, he'll look to reduce regulations, he'll look to lower taxes or extend his own tax cuts. So he is a candidate that should be good for economic growth in the US. Now, it's not all good news, as you mentioned in your introduction. The tariffs that he is looking to slap on just about everyone, that's not a business-friendly policy, that's not good for trade, that's potentially inflationary. So, yeah, definitely some swings and roundabouts. But look, one day in, financial markets like what they see, and they have risen very strongly.
So a stronger US dollar, would that consequently lower ours? Is there's good and bad, is that correct?
Yeah, 100%. So the Kiwi dollar is down in the 50s now. And to be honest, it's been drifting lower for about the last month as we've all, because this is the expected outcome. We expected Trump to win. He was the favourite and the odds were pointing to a Trump victory. So this is not a surprise. And the market knew that, the dollar knew that. So it's been falling anyway. Stronger US dollar means lower Kiwi dollar. Now, is that good or bad? Well, if you're an exporter, if you're a farmer, or if you're an exporting company, a lower dollar makes you more competitive. So that is a good thing. If you're an importer, like many of us are, or consumer, we all buy our fuel and other products from overseas. Yeah. A lower currency means that our buying power is lessened, and that potentially sort of has an impact on imported inflation, doesn't it? So You really have got lots of swings and roundabouts. I think it's good for investors, it's good for financial markets, it's good for US economic growth, for New Zealand Inc. Those tariffs are really the thing that we need to keep an eye on. But before panicking, I think we just need to be mindful that he won't slap a 60% tariff on China, and he won't sort of slap a blanket 10 or 20% tariff on anyone. That would damage the US economy more than it would help it, and it would really backfire. So that rhetoric that you heard on the campaign trail, I don't think he'll follow through. It'll be a bit more targeted. It'll be a bit more watered down. What he says when he's out on those sort of, cult-like campaign sort of rallies, that won't necessarily be what happens when he actually gets behind the desk next year.
And isn't it interesting because, the people that have voted, obviously, for him believe this is going to happen, maybe without understanding the complexities behind it. But then they all mark, both sides tell big stories. What about the tariffs, though, could mean a rise in inflation? And am I correct in that? Could it affect even our mortgage rates here with the Reserve Bank? You know, how they are so very twitchy about inflation.
Yeah. Look, it could. It 100% could. Tariffs are inflationary. So, and what what happens in those big economies like the US and China filters through to us because we're teeny tiny and we just sort of follow rather than lead. So, yeah, tariffs are inflationary, absolutely. It's just a matter of, it's difficult to sort of put some specifics on how inflationary they will be for us. Now, what does that mean for the Reserve Bank? Well, you will still get that 50 basis point rate cut at the end of this month. That's almost certain, so that'll happen. So the OCR will still head lower, and then I think it will still keep heading lower into next year. But, you know, what might happen is the Reserve Bank might have to just keep a closer eye on some of these issues, and it might not ultimately fall quite as low as it otherwise would. So it's still going to go down from here. What is it at the moment? 4.75. You know, it's still headed lower. It'll still end up in the threes, but, you know, will it go down quite as much as some people had been expecting it to, or will it settle slightly higher? So, yeah, the mortgage rates, I think they'll still continue to drop, but they might not drop quite as much as some are hoping for. So we've got to be a little bit mindful of those sorts of things.
Mark, with Trump 2.0 back in the White House, with the pretend, well, he's going there next year, obviously, but has this been good news too for our KiwiSaver?
Yes, probably. Depends which KiwiSaver fund you're in and what that fund invests in. If you've got shares in your fund, which most do, then you'll be pleasantly surprised today if you log in and check it. You know, the US share market is the biggest in the world. It's about 60% of world shares. So any KiwiSaver fund that has a share component will be heavily weighted to the US, and US market's at a record high and the Kiwi dollar's down. So you might even get the double whammy. So most KiwiSaver funds, I would think, will be up on the back of this. And if I had to guess, I would say that the market will probably have quite a strong finish to the year. So they'll probably keep going up through to year end. If you're in a more conservative fund, you might not have seen that same benefit, because one response overnight was that longer term interest rates in the US went up because the market sees potentially higher inflation, higher debt levels in the US, and that all sort of leads to, you know, slightly higher interest rates. That's sort of that goes in hand with better growth. You know, if you're going to have better growth, you potentially have to expect higher inflation and maybe higher interest rates. So that can impact the value of some of the more conservative investments like government bonds and corporate bonds. So it all depends what you've been invested in. But if you had a balanced fund or a growth fund, and you've probably got a fair whack of shares in your KiwiSaver, and that probably means you have seen some gains.